Something big is brewing in the world of finance, and it's not just another market trend or passing headline. At the center of this growing buzz is XRP, a digital asset that for years, many experts and investors dismissed as a long shot. Once considered polarizing and even controversial, XRP is now drawing the focused attention of Wall Street's most powerful institutions and financial leaders. So, why now? What's changed to make global asset managers, not just retail investors, take a closer look at XRP's potential? XRP was designed from the ground up to revolutionize cross-border payments, making them not only faster and cheaper, but also more transparent and efficient than the decades-old SWIFT system that currently dominates international banking. For years, legal battles, regulatory uncertainty, and widespread skepticism overshadowed this ambitious vision. But now, the very banks and financial giants XRP was built for are starting to show real interest. This isn't just hype or speculation, it's a wave of calculated curiosity from institutions that collectively move trillions of dollars every single day. The conversation has shifted dramatically from, if XRP can make a difference, to how. How can this technology actually solve real-world problems for banks, corporations, and even governments? As the crypto industry matures and the line between digital assets and traditional finance continues to blur, XRP's unique structure and use case offer a potential bridge between these two worlds. Is this the moment XRP finally fulfills its original promise, or is it just another chapter in a long and unpredictable story? The implications could reshape not just XRP's future, but the entire blockchain landscape as we know it. Let's dig deeper into why Wall Street is suddenly watching XRP so closely, and what it could mean for the future of finance. To understand XRP's moment, let's look at the broader crypto market. The landscape has evolved dramatically over the past few years, shaped by both innovation and hard lessons learned from past volatility. In late 2025, crypto is no longer the Wild West. It's more resilient and sophisticated. Institutional players, from hedge funds to multinational banks, are now active participants, bringing a new level of stability and credibility to the space. Bitcoin remains the store of value, Ethereum powers Web3, and specialized blockchains are finding their own niches. Each network is carving out its role, whether it's for payments, smart contracts, or decentralized identity. The industry is maturing into a multi-chain world, where different networks excel at different tasks. Interoperability is no longer a buzzword, it's a necessity, as users and businesses demand seamless movement of assets and data. XRP stands out for its focus on serving the financial industry, not as a decentralized utopia, but as a pragmatic tool for banks. Its technology is designed to solve real pain points in cross-border payments and liquidity management. As regulatory clarity improves, projects that speak the language of compliance and efficiency, like XRP, are drawing institutional attention. Governments and regulators are now more open to digital assets that fit within existing frameworks. XRP's price often moves independently of Bitcoin, signaling its own narrative is driving value. This independence is increasingly seen as a strength, especially as investors seek diversification beyond Bitcoin and Ethereum. Today's market is defined by cautious optimism and a focus on real-world utility. Hype alone isn't enough. Projects must demonstrate tangible benefits and sustainable growth. Investors are asking, does this project solve a real problem? Is it positioned to thrive as regulations tighten and competition increases? Is there a path to adoption? Are there partnerships, pilot programs, or real-world integrations that prove the project's value? In this environment, the whispers about Wall Street and XRP are gaining traction. The possibility of major financial institutions adopting XRP is fueling speculation and excitement. The market craves tangible progress, and XRP's potential integration into global finance is a compelling story. Every new partnership or regulatory milestone adds fuel to the narrative. Let's see what's fueling these rumors, and why so many eyes are on XRP right now. BlackRock, Vanguard, and JPMorgan. These are names that don't just participate in markets, they shape them. Now the rumor mill is buzzing with talk that these financial titans are setting their sights on XRP, the digital asset that's been making waves in the crypto world. Collectively, these giants manage trillions of dollars in assets. Their potential interest in XRP isn't just a passing curiosity, it could signal a fundamental shift in how the world's largest institutions view digital assets and blockchain technology. If BlackRock were to get involved, it would be a massive vote of confidence for XRP. Such a move could unlock a flood of institutional capital, opening doors that have long been closed to most cryptocurrencies. Vanguard, famous for its cautious and methodical approach, even considering XRP's underlying technology, would mark a significant turning point. It would show that even the most conservative players are taking digital assets seriously. JPMorgan, which has already developed its own blockchain solutions, might see XRP as a complementary tool, especially for cross-border payments and specific global payment corridors where efficiency is key. Of course, at this stage, these are still just rumors. But the sheer volume and credibility of the chatter suggests that serious discussions are happening behind closed doors, and the financial world is paying close attention. These institutions aren't driven by hype or speculation, they're driven by hard data, efficiency, and the potential for real-world impact. Their quiet, methodical exploration of XRP could mean that the asset is finally moving from the realm of speculation to becoming a real contender in the future of global finance. In the world of crypto, rumors can easily manipulate markets, but when persistent whispers come from credible sources, they often signal that real change is on the horizon. If even a fraction of these rumors turn out to be true, XRP's role in the future of finance could be nothing short of transformative, potentially reshaping how value moves across borders. So what could be the next big catalyst for XRP? Let's dive into the ETF question and see what's on the horizon. After Bitcoin ETFs, speculation is swirling about which crypto could be next, Ethereum, or maybe XRP. An XRP ETF would let traditional investors access XRP through the stock market, bypassing crypto's technical hurdles. ETF approval would mean regulatory clarity, especially significant given XRP's legal history with the SEC. Such a move would validate XRP and set a precedent for other tokens facing regulatory uncertainty. Unusual price surges and trading volumes hint that sophisticated investors may be positioning for a major announcement. An ETF would open the floodgates to new capital, driving demand and price. But the path is tough. The SEC scrutinizes every detail, from XRP's consensus mechanism to Ripple's holdings. Skeptics say an XRP ETF is more complex than Bitcoin's, but the conversation is happening at the highest levels. The mere possibility of an ETF is energizing the market and showing how far XRP has come. The ETF question remains open, but it's the most captivating puzzle in crypto today. No XRP story is complete without the SEC. The legal battle over whether XRP is a security defined its recent history, casting a long shadow over adoption. A landmark ruling clarified that XRP isn't a security on secondary markets, a turning point for the asset. Yet, regulatory uncertainty lingers, with the SEC's leadership and priorities in flux. Reports of SEC officials linked to competing blockchain projects have fueled concerns about fairness. The revolving door between regulators and industry raises questions about bias and influence. The XRP case is now a litmus test for U.S. crypto regulation. Will the rules foster innovation or stifle it? As the SEC weighs future appeals and ETF decisions, the outcome will send powerful signals to the entire market. To see why institutions care about XRP, look at its technology. The XRP ledger. Unlike Bitcoin's energy-hungry proof-of-work, the XRP ledger uses a fast, efficient consensus mechanism. Transactions are confirmed in 3 to 5 seconds, making it ideal for high-volume, low-cost cross-border payments. Imagine sending money overseas in seconds for a fraction of a penny. XRP makes this possible. For global banks, this means massive savings and operational efficiency. The XRP ledger also supports tokenization and has a built-in decentralized exchange, making it a versatile platform. It's not just for payments, it's a financial toolkit for the digital age. This underlying tech is what's attracting Wall Street's attention. XRP isn't just a speculative asset, it's a piece of financial infrastructure. Understanding the ledger is key to understanding XRP's real-world potential. As institutions seek speed and efficiency, XRP's technology stands out. That's why the world's biggest players are taking a closer look. XRP's journey closely mirrors the crypto industry's ongoing path to mainstream acceptance and recognition. The focus has shifted from pure speculation to real integration with global finance and everyday transactions. The next big catalyst could be a possible ETF filing from a giant like BlackRock, or a major international bank announcing a groundbreaking pilot program for XRP. These moves could transform XRP from a speculative asset into a vital tool for global commerce and trade. The outcome remains uncertain, but the potential for growth is truly immense. Staying informed and thinking critically is essential as the landscape rapidly evolves. The convergence of traditional finance and blockchain technology is the story of our time, and XRP is at its heart. The future is unfolding right now. Are you watching closely?